Welcome back to Stocks Telegraph. In today's video, we'll be taking a close look at Pfizer, trading under the ticker PFE, a pharmaceutical giant that's been making headlines and could potentially outshine other biotech stocks by 2025. Whether it's groundbreaking therapies, strategic acquisitions, or robust R&D pipelines, Pfizer has consistently demonstrated its ability to innovate and stay ahead of industry trends. But is this company poised for a major surge over the next couple of years? Stay tuned as we dive into Pfizer's key strengths, recent milestones, and growth strategy that could propel its stock to new heights. Before we get started, make sure to subscribe to Stocks Telegraph. Your support helps us grow and bring you more exciting financial content. Drop your thoughts and questions in the comment section below, like this video, and share it with your friends who are just as passionate about investing as you are. Let's get right into why Pfizer could be the biotech stock to watch through 2025. Currently trading at $27.13, Pfizer carries an analyst's mean target price of $31.50, implying considerable upside potential. Over the past month, the stock has climbed by 5.56%, showcasing a notable uptick in investor sentiment. Despite this recent rally, Pfizer remains 13.98% below its 52-week high, suggesting there's still room for further gains. Beyond its stock price movement, Pfizer's operational metrics speak volumes. With a gross margin of 58.50%, the company's efficiency outperforms many of its biotech counterparts. Analysts are projecting a remarkable 58.76% EPS growth next year, and the company's annual sales growth over the past 5 years stands at 19.51%, underscoring its capacity to scale consistently. Meanwhile, Pfizer's PE ratio of 36.47 and a forward PE of 9.36 indicate a potentially attractive valuation for future earnings, which bodes well for investors seeking long-term gains. Pfizer Incorporated, with its reaffirmed annual revenue and earnings forecast from October, has garnered renewed investor interest. BMO Capital analyst Evan Seigerman recently maintained an Outperform rating, assigning a $36 price target, implying a potential 37% return for those buying at current levels. Although the stock has dipped around 10% in the past 12 months, this analyst endorsement signals optimism about Pfizer's near-term and long-term prospects. In the third quarter of 2024, Pfizer reported $17.7 billion in revenue, marking an impressive 32% year-over-year increase. Much of this uptick is thanks to its strong oncology portfolio, featuring products like Padcev, Xtandi, Lorbrena, and Braftovi-Mektovi. Additionally, the company successfully addressed heightened demand for Paxlovid during the recent surge in COVID-19 cases. Financially, Pfizer remains on solid ground. The company returned $7.1 billion to shareholders in the first 9 months of 2024 through dividends. Moreover, on December 13th, Pfizer announced a 2.4% increase in its quarterly dividend to $0.43 per share, marking its 15th consecutive year of dividend growth. With a dividend yield of 6.47% as of January 5, Pfizer stands out not only as a growth play, but also as a compelling dividend stock for income-oriented investors. Despite its prominence in the healthcare sector, Pfizer trades at a forward PE ratio of around 9, a steep discount compared to the nearly 20 forward PE average of the Healthcare Select Sector SPDR fund. Some might wonder if something's amiss, but Pfizer's fundamentals remain robust. While it's true that COVID-19 vaccine revenues have waned, the company still expects to generate between $61 billion and $64 billion in total revenue for 2024, up from $58.5 billion in 2023. Minimal growth is projected in 2025, but investors shouldn't forget Pfizer's high-profile Seagen acquisition, aimed at strengthening its position in oncology, a huge potential growth driver over the long term. The company is also focused on cost-cutting measures to align with reduced COVID-19 vaccine demand, all while maintaining a massive drug pipeline of 108 compounds that could fuel future expansions. Still, it's important to note, Pfizer faces upcoming patent exclusivity losses on top-selling drugs like Eliquis and Vyndaqel in the next few years. However, management's aggressive push into R&D and strategic acquisitions indicates a proactive approach to offset these challenges. For long-term investors, the current depressed valuation could be an opportunity to buy in ahead of a potential turnaround, as Pfizer's pipeline and acquisitions could pay off significantly down the road. From a robust oncology segment and steady dividend growth to ongoing innovations in both treatments and acquisitions, Pfizer's diversified strategy positions it well for future success. Analysts see the company's depressed valuation as an opening for investors to capture upside over the next few years, especially if Pfizer continues to execute on its extensive pipeline and drive expansion in high-demand therapeutic areas. Pfizer may be trading at a steep discount compared to its healthcare palace peers, but its fundamentals suggest there's more to this story than meets the eye. With reaffirmed revenue guidance, a strong and diversified pipeline, and a focus on high-potential areas like oncology, the company is positioning itself to overcome near-term challenges such as patent expirations. Add in its steady track record of dividend growth and disciplined cost management, and you have a pharmaceutical giant that's aiming to outpace its competitors by 2025. Whether it's through strategic acquisitions, a well-stocked R&D pipeline, or a commitment to shareholder returns, Pfizer could very well be the biotech stock to watch for significant gains in the coming years. Thank you for tuning in to Stocks Telegraph. If you found this analysis helpful, don't forget to like this video and share it with your fellow investors. And if you haven't already, make sure to subscribe to the channel for more insightful updates on the hottest stocks and market trends. Let us know in the comments section below. Do you think Pfizer's valuation and pipeline make it a great buy right now? Or are you cautious about the looming patent cliffs? We'd love to hear your thoughts. Until next time, happy investing.